I'd like to invite Frank Melia up. And we're going to have a very nice reception catered by Mazzone Hospitality. I hope you can all stay at 5:30. When we break, the bar will be open and we'll be having butlered hors d'oeuvres. So we hope you can stay and network. And this gentleman is paying for it. He is the sponsor of the reception tonight. Frank, who is with Contour Mortgage, and Frank lends into unusual situations like limited liability companies, irrevocable trusts, and I'll let him tell you the rest.
Thank you, Lou. It's a good way to introduce me. I'm paying for the alcohol later. I was just talking to Beth in the background. I remember when, like 4 years ago, every time you talked about the Beat It Trust, they played Michael Jackson.
We did that.
You should have done that this year. There you go. Good afternoon, everybody. I'm between you and the first coffee break, so I'm only going to take a few moments. Hopefully, I work with a lot of financial advisors, accountants, and attorneys, and hopefully you all have a local banker relationship or a mortgage broker when you talk about housing wealth and different types of strategies. Where I usually come into the equation is the out-of-the-box stuff. I'm known throughout the industries as like the out-of-the-box mortgage banker. And being a banker, so you know, we also have the ability to broker. So in its simplest form, I cover every program that's out there based on the case that you bring to us, if it's unique or if it has some, unique legs to it. I meet most of the financial advisors, accountants, and attorneys that we work with through events like this. I've done CE events, CLE events, so if any of you do local events and you'd like a sponsor, or if you'd like someone, depending upon the topic, reach out to us. We'd love to support you. I met Lou about 10 years ago, and Lou's always emphasized, and he's mentioned it in today's presentation, that it's a team, it's a collaboration. So if you work with, if you discuss housing wealth, if you're looking for strategies, I only can lend to real property. So I can't lend to like artwork or other types of valuables. But if it's real estate, residential or commercial, and it doesn't fit into the box, or if it's not something that your local credit union or your local banker can handle, or have or you just want an opinion, reach out to us. You'll be thankful. I became a certified mortgage planner in 2007. I mention that because a lot of you here are certified financial planners and CPAs and EAs. And working collaboratively with all of you with these types of out-of-box strategies, I'm just going to mention a few of the case studies and some things that we've worked with so you get a good idea of how we're able to fit what we do into your practice. We had crypto. We'll mention what Rustin went over earlier today. The way we look at crypto is we can use it as an asset on certain loan programs to what we call asset utilization or asset depletion. The formula that we use in our programs is we only use Bitcoin at this point. I'm sure that'll expand, but if someone is holding Bitcoin or the equivalence of Bitcoin, we take the market value throughout the loan process, through the closing. So we had a client buying a high-end home down in Florida. He had about $10 million in Bitcoin. What we do is we give it a 60% haircut right there. So we're only considering $4 million of the asset due to fluctuation, obviously, in the crypto market. And then we just divide that by 84. It's just a formula that underwriters have used. And on 10 million, we were able to say he had $4 million in the crypto asset. Divide by 84, it's about $47,600. We're able to use that as income to qualify. So it's really for your clients that have maybe low earned income or their AGI isn't the greatest to buy that home that they're looking for. So, just based on what today's presentation was, that's how we look at crypto, and we can use it. We can also use it as, we could have used the $4 million as an asset, like if they needed reserves for an asset base, but usually when we come across the crypto, it's usually to help them solve the income for the loan program. So we use that formula. We've had a couple of high net worth clients recently with Lou's firm where they were looking for assets, or they wanted to gift more assets, due to their estate plan. So we have a woman right now that we're trying to help. She has a $15 million co-op in New York City. So we were able to give them a jumbo reverse mortgage. The reason why the reverse mortgage worked, I believe, was because of cash flow. Not that she didn't have the proper cash flow, but So you know how the reverse mortgage program works. There's two different types of programs, but it's a program where you can extract equity from a property as long as it's your primary residence, and you don't have to repay the debt during your lifetime. I mean, you can pay the debt down at any time. There's no penalties, but sometimes in the high-end estate planning cases or any type of case that you're looking at where they have asset, where their primary residence, they have to be 60 or 62 to qualify for these programs, but we're able to using actually now a reverse mortgage.
In that case, her cost of care was also several $100,000s a year. She had 24/7 RN care in that apartment. So they needed cash flow to pay for care, which is where we see a lot of reverse mortgages being used, is to access the equity in a home to supplement the payments for home health care.
Thank you. I got like 5 phone calls today driving here about bridge loans. So you might have a lot of clients, we all see it, even ourselves, that selling their home, moving to a different state, relocating down south, or just relocating locally. Bridge loans kind of left the marketplace a few years ago. There was always the private equity, if you know about private money, but those guys and girls are charging 12%, 4 points, 6 months interest. So we have a HELOC, which is a home equity line of credit bridge loan. We can actually do it in revocable trusts, living trusts. Can't do them yet in the irrevocable trusts, but we've got a lot of requests on that. We're giving you a HELOC to the client. It's going to be on the property they're selling, no prepayment penalties. They're going to use that to purchase the new home. We helped the client through Cerity Partners, where she used it for the purchase in Florida, and then she also used some of the line of credit to rehab the property before she sold her property, and then she paid off the HELOC afterwards. Or you can keep the HELOC. We also have an asset-ready program, and I'll end on this. An asset-ready program, in its simplest form, means when you have an ultra-high net worth client, I like the old days. This December will be my 25th year in retail banking, and when I first got into banking, there was asset-based lending. When clients just had huge assets, the banks would lend them money. It's changed over the years, obviously, but with the asset-ready program, if the asset that the client, liquid assets, investments, cash equivalents, if they have enough in their qualified plans, IRAs, or non-qualified, if their asset combined is greater than the loan amount we're lending them, which could go up to $5 million, all of their debts combined, like if they have any debts on their credit report, and we also look at the cost, the payment on that mortgage for the first 10 years. When you add up all those numbers, if their assets are greater than that, they literally sign an application and close. Okay? It's obviously credit driven, and most of our clients in those programs are over 800 credit scores. But it's unique. We do have a lot of these unique programs, and it's based on all of you here today. Before I got into retail banking, I was on Wall Street. I was a financial advisor for 10 years, so I still work with a lot of wealth managers. I still have that mentality of looking at the entire picture, more or less, of what the client's going through. So based on feedback from you guys, we have the underwriters that hopefully listen, and they do, and we have these programs. And I'll end on the last note, like Lou said, we can lend to LLCs, we can lend to revocable trusts, we can lend to life estates, but what really makes us stand out, and what we've been told by most of our professionals like you, is we're the only lender and team that lends to irrevocable trusts. So when you have these irrevocable trusts, and there's real estate in those trusts, and you need liquidity for whatever reason, we have multiple programs, from lines of credit to fixed rate mortgages to reverse mortgages. So you have a large choice of what you can, implement for your client, and everything stays in that trust, where some banks will have a deed at the closing table asking your client to deed the property out of the trust.
Yep.
And hopefully you don't get that phone call, because I get that phone call and then I call Lou, or I call the attorney or the financial advisor. And on an ending note, enjoy the coffee break. And
one more comment. I have an email sitting in my inbox that came in yesterday from a client who we did a Medicaid asset protection trust for, an irrevocable trust. They have their home in it. They want to take out a home equity line. So they went to their local credit union. And she has a letter from the credit union saying, just go to your attorney and have him write a letter giving us the authority within the trust, the law behind it, and all the purposes that you want to take this loan out from the irrevocable trust. And I'm looking at it and say, they're not going to give her the loan anyway, because that's not an appropriate use of a Medicaid asset protection trust. But
I see that happen. I work with local credit unions. I work with local bankers. They don't understand trust.
Yeah.
I don't think they ever, it's a shame, they should, but they're just trying to appease the client or really tell them, because there's not really much. See, the guidelines, all banking guidelines from Fannie, Freddie to Ginnie don't mention irrevocable trusts. The only way we got this done 15, 20 years ago, we went to private equity, we went to Wall Street, and they're giving us very good competitive rates with the irrevocable trusts, because we give them a certain amount of volume. Banks look at volume, you know, but a local bank, I've seen one or two local banks, community banks around the country, because we do this around the country, where they'll do an irrevocable trust loan, but then after they close the first one, the board of directors gets together and says, what are we doing this for? It was one loan, it was $50,000 or whatever the client needed. So it's Wall Street, it's not greed, but it's Wall Street trying to just make sure that, and the banking system making sure that there's enough volume in these types of loans. Just remember, irrevocable trust loans, I'm definitely someone you can speak to, and enjoy the cocktail party, and hopefully we'll see everybody afterwards.
So we have caffeine and sugar to get you through to cocktails over here to my left. Please enjoy the coffee break. Thank you for your kind attention.